Good evening, everyone. I am Meloni Ghattaria from the Events and Academy team, and on behalf of ME Network, I would like to welcome you all to another exciting academic session. As you know, MA Academy is a knowledge sharing platform to educate startups and investors about the upcoming trends in the startup ecosystem. Our masterclass today focuses on demystifying cryptocurrencies and Bitcoin. Our faculty today is Sidharth Sogani, who is the founder and CEO of CREBACO, which is a research, intelligence, and rating company focused on blockchain and cryptocurrencies. Sidharth helped CREBACO develop a unique matrix to conduct the assessment of emerging tech companies in the blockchain and crypto space using 150 plus parameters covering legal, tech, financial, and due diligence involving over 2000 plus data points and making that data immutable using blockchain technology. Thank you, Siddharth, for presenting this session to our members and guests here today. We will be taking the questions throughout the session. Do send them via the chat window and the faculty will address the same. You will also have the chance to ask your questions in the dedicated Q&A segment towards the end of the session. I know the audience is waiting to hear from you, so without any further ado, over to you, Siddharth.
Hi, everybody. Thank you so much, Mumbai Angels, for providing this opportunity. And
Uh,
yeah,
Siddharth, hi, I'm just going to ask the audience to bear with us for about 30 seconds. And there is a message on your WhatsApp. If you can just look at that right away. Uh, I will ask Miloni to again introduce Siddharth while we just take about 30 seconds of your time, audience. Please bear with us.
Good evening, everyone. I'm Meloni Ghattaria from the Events and Academy team, and on behalf of MA Network, I would like to welcome you all to another exciting academic session. As you know, MA Academy is a knowledge sharing platform to educate startups and investors about the upcoming trends in the startup ecosystem. Our masterclass today focuses on demystifying cryptocurrencies and Bitcoin. Our faculty today is Siddharth Sogani, who is the founder and CEO of CREBACO, which is a research, intelligence, and rating company focused on blockchain and cryptocurrencies. Sidharth helped CREBACO develop a unique matrix to conduct the assessment of emerging tech companies in the blockchain and crypto space using 150 plus parameters covering legal, tech, financial, and due diligence involving over 2000 plus data points and making the data immutable using blockchain technology. Thank you, Siddharth, for presenting the session to our members and guests here today. We will be taking this question throughout the session. Do send them via the chat window, and the faculty will address the same. You will also have the chance to ask your questions in the dedicated Q&A segments towards the end of the session. I know the audience is waiting to hear from you, so without any further ado, over to you, Siddharth.
hello, everybody. Wow, there's a lot of people. Okay, so can you guys hear me and see my screen?
Yes, we can, Siddharth.
All right, fine. So we are a research, rating, and intelligence company, like how Meloni just introduced. What we do is we are trying to make this ecosystem more regulated and more organized. And one second. Yep. So we are here today talking about the governance. So just we are doing research, rating, consulting. We also have our ETFs, which is exchange traded funds or index funds, and we are also helping the governments, regulators, special economic zones in issuing licenses, creating better frameworks to regulate cryptos in this ecosystem, because a lot of people don't know how these things work, right? So that's what we are good at doing. And we have one of the largest comprehensive research databases of crypto in the world, comprehensive, which mainly focuses on the legal, the tech, the finance, and the team. We put all together, make sense out of it, make a research report, give it to individual and institutional investors. Governments need a lot of data, so we provide them data through APIs, through data points, and of course they can also log in And so we are basically a data bank for this ecosystem. Today we are mainly talking about crypto governance. So how many of you guys know crypto, or have basic understanding of it? Okay. 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 Few people know what crypto is. Good. All right. So crypto is something which is uh, it's a decentralized ecosystem. I'm just trying to wrap up what crypto is in a few words. So basically, it's a decentralized instrument which is basically not governed by any government, issuer, or a regulatory body. So how it works is like it's internet. It's a layer over the internet. All right. So it's a peer-to-peer thing. So what happens is, if I want to send you Bitcoin, I don't need to go to a bank. I don't need a debit card. So say, for example, I have A bank and you have B bank. I'll go to A bank, send an IMPS or an NEFT. A bank sends it to B bank, and B bank sends it to your account in B bank, of course. But in crypto, you can transact this, do this transaction directly from me to you, right? So who validates this transaction? Like, this transaction has happened, right? You can always say that I never got the money. So the person who validates that transaction is actually not a person, but a network, which is called blockchain, which validates transaction. So that, anybody can go and see that wallet ABC, which belongs to Sidharth, has transferred to wallet XYZ, which belongs to Mumbai Angels. So this validation is done by blockchain. So blockchain uh, is just a tech which is used to validate transactions and make the database more immutable and reliable in the long run. So what a lot of people have done is they have picked up the blockchain element out of it and have started applying it to several other uses. But primarily, blockchain was developed for Bitcoin to solve the Byzantine's general problem. Now you can Google Byzantine's general problem, where the general wants to make a decision to attack, and other his generals were coming to him and telling them different information. So he wanted to validate what is the actual situation at the front line. So that's, that problem is basically solved from blockchain. So now crypto was created. Now it's borderless, peer-to-peer, layer over an internet. So it cannot be banned. You cannot ban crypto. So when you read about the news that we are banning crypto, they cannot ban it because it's a layer, it's internet, right? So if you have access to internet from any mobile device, you can transact. So how can you ban it? Anybody has any questions till now? How can you ban it? How can you ban internet? People have been using VPNs. People have been using several other ways to access content which is being banned, right? So you cannot ban something which is on the internet. Even if you are in Africa, jungles of Africa, or anywhere, you have internet, you can transact. So I read in the news a couple of days ago that they tested a blockchain transaction in space as well. So because space had internet, and Elon Musk also bought crypto because he wants to transact with Bitcoin on Mars. So it's just a joke. I'm not sure about that. So banks and governments don't like it because they lose the control. So they won't know that we have done this transaction directly. So that's why banks don't like it. But banks have to start dealing with crypto very soon. You'll see this transition take place in the next 3 to 4 years, because according to a report by World Economic Forum, they said that by 2025 to 2027, about 30% of the world's transactions will be done using blockchain technology and cryptocurrencies. So if that is going to happen, either the crypto market, the way it is going to blast, or else that means the banks will also start accepting crypto and blockchain and other decentralized instruments to transact. There are a lot of projects which are helping the banks to transact directly without using Swift in a borderless manner. So, which countries accept crypto and which countries have banned it? Any ideas here? Okay, US accept crypto. Akila says. Okay, which other countries accept crypto? Germany does accept. First world countries. Oh, so that means even India should. Nigeria has banned it. Estonia, Spain. More. Which countries have banned it? All the first one countries accept it. That's a good question. I'll come to that. North Korea? No, North Korea has not declared its stance on crypto, but I'm sure they have a lot of it. China, it's a blanket ban. So basically you can mine Bitcoin, you can transact with Bitcoin, but you cannot go to a bank to convert your Bitcoin into cash like how we do in India right now. So it's a blanket ban. Okay, all right. So let's have a look. What is the global scenario? So currently, the green ones have clear regulations. They accept crypto. The red ones have banned it, and the yellow ones are still in the process. It's written restricted over here, but it's restricted to. I mean, it's actually not restricted. It's more than regulated here. So what happens is when you are declaring your crypto in your books and you are paying tax, that means it comes under some regulation, right? It's not that it is completely in the gray zone. If you are showing your crypto holdings in the bank, in your books of accounts, that means it is coming under some regulation. So when people say it's unregulated, that means that there is no specific regulation towards crypto, but there is an existing framework which can accept crypto the way you declare it, right? So right now the government is confused whether it's a currency, it's an asset, it's a commodity. They don't know that yet, right? So you can show it as an asset or a currency however you want to, but there is no specific regulation कि आप इसको ऐसे ही दिखाओ, right? Currently 130 plus countries are accepting crypto. They have not criminalized it the way the news is saying that you'll get 10 years of jail and 25 crore rupees of fine or stuff like that. Nobody has criminalized it. You buy crypto, you sell crypto, you transact in crypto, you declare it, you pay taxes, everything is good. Partly regulated or in process of regulation. So when I say partly regulated, it comes under purview of some regulations. Right now in India, it comes under the purview of income tax. If you're getting profit out of something, you have to pay taxes, right? So it is coming into that purview. China has a blanket ban, I just explained. Argentina, Brazil, they are all exploring. So they are as complicated governments as India is, and they're not if you want to regulate or bring some new instrument into mainstream, it takes a lot of effort. The Indian ecosystem is really, really huge. There is central government, there is state government, there are committees, there are this, that. So it's very difficult. Like GST took 10 years here. The Information Technology Act, like internet came in the early 90s and the IT Act came in 2000. So India does take time. But now it has speeden up. I see that in the next 1 year, we should have some clarity on where India is going to, accept crypto or ban it or regulate it or whatever it is. But I don't see that they would even consider banning as one of the major options, right? You cannot ban something which it's rather you regulate it and get money out of it. You take taxes from the government. So that's what is going to happen. What is the need of crypto? Okay. So the existing ecosystem which we have learned finance, economics. Over there, Alfred Marshall said that inflation is good, right? In the long term, inflation is really good because it grows the entire ecosystem. But what happened in the 1970s, um, the intrinsic value for a rupee, like for 1 rupee, you must have 1 rupee worth of gold in the bank. That rule was abolished. So what the government started doing is they started printing a lot of money to relax the economic situation of any country. What happened in 2020 is a clear indicator of that. In 2020, the US government printed around 25 to 30% of the US dollar, which is in rotation in the world, just in 2020. That's called a helicopter drop. That happened because of COVID. They wanted to give relief to everybody. People lost jobs, this, that, but they gave money to everybody. Now, for example, in this room, there is one apple or one pen. You've got 10 rupees, I've got 10 rupees, everybody's got 10 rupees, right? So, and they are ready to bid for this pen for 10 rupees. Now, everybody gets 100 rupees, all right? You'll say, I'll buy it for 11. The other guy will say, I'll buy it for 12, 13, 14, 15. And the price of this pen will start going up. That's one of the reasons why the stock market, gold, silver, everything is going up because there is higher money supply in the market. That's inflation. So, what's the point? Inflation is not good at this level. It is good if it is done in a very controlled manner, but a sudden pumping in of money is more like a bubble. So if you see every 10 years there is a recession, right? It happened in the 1980s. It again happened in the early 90, I think 92 or 93. Again, it happened 2000. It happened to 2010 when the entire depression period was going on. That uh, you know I forget, I'm forgetting the incident, but it was happening then. So when this is happening, the sudden inflation is actually settling down during that recession period. So a lot of people lose jobs. Companies go completely bankrupt during this time. So inflation has some catastrophic effects, which is not good in the long run. So Bitcoin came out with this. I think during the 2008 crisis, Satoshi Nakamoto must be a victim of some kind of. I'm just assuming it's just a sounds to be a good story that he must be going through some banking problem, or he must have gone bankrupt. He must have thought that let's make something which has a limited supply, which is peer to peer without the control of banks. A lot of bank accounts were seized during that time. People could not pay their mortgages and stuff like that. So he must have created this crypto, which is with a limited supply, which is actually not inflationary but deflationary. So Bitcoin specifically will be only 21 million in existence. Till now, about 18.5 million have already been mined, and the remaining will be mined till 2140. After 2140, there will be no new Bitcoins, so the miners will only get the transaction fees. I won't get into mining, it's a little technical topic. If you have any specific questions, you can mail me. So he made crypto with a blockchain based thing, right? So if there is no complete transparency. It's not like the Indian government or the Federal Reserve or any regulator who says that yes, we have 100 tons of gold and we are issuing 100,000 rupees or whatever the amount is, right? So you cannot go into the reserves of Federal Reserve or the Reserve Bank of India and see how much gold they have, right? So there is a problem of verifying that the holding. They may be bluffing, right? So this has been happening. The Federal Reserve has now moved from the trust in gold to the trust in government. So there is this gap of transparency. Now, it is also really complicated. If you want to send money to somebody in the US, you go to your bank, you send give the, fill 10, 15 pages of papers, write the reason why you're sending the money, attach invoices, your source of income, your income tax return, all those things are given to the bank. Then the bank confirms that, they convert your Indian rupees into US dollar. Then they send to their Nostro account. Then it is transferred to the receiver's Vostro account. Then he gets the credit. This entire process takes at least 4 days, at least 3 to 4 days for sure. If you're not regularly doing it, you're definitely spending a week on it. So if you want to do it in crypto, all you need is the recipient's wallet address and you can transfer it directly. So if I send crypto, am I doing money laundering? Technically, if you're sitting in India, you are. You must declare that this crypto is going out of India, which a lot of people are not doing. So that requires regulation. There, the exchanges or the wallets must be verified so that if the money is moving out of the country or coming in the country, the government knows that it is happening, right? So also we don't need a third party, we don't need a bank, we can just transfer directly. Also, if it's like it's a Sunday or Shivratri is coming, if you want to go to the bank, banks are closed, there could be a long weekend, you cannot transact. So those problems are there where crypto market is 24/7, maybe 2 in the morning or 1 in the afternoon on a Sunday, no problem, you can transact whenever you want, wherever you want, you just need internet. And yes, you just need internet. Even a $50 phone can have a WhatsApp, like just like a WhatsApp. There are several wallets available. You can download any and start transacting in crypto. So it's like, there are a lot of people in. I know somebody in Zambia. He did not have any KYC documents to open even a bank account, right? But since he got crypto, he could send money back to his hometown without any banking. So there is a big problem which crypto is solving. Why do you think crypto is good? But any uh, comments? Why do you think crypto is good? Because it's decentralized, can't be counterfeited. It's universal, ledger based, Ethereum and Dogecoin. Okay, speed, transparency. It creates wealth. Hmm. At least so far can't be counterfeited. Anonymity. No, it's not anonymous, it's pseudonymous. At least Bitcoin is. Upside potential. Of course, it is limited in supply. It is bad. How? Less reliance on fiat currency. Speed and efficiency. Unique. I'm liking the answers over here. Yeah? It's quite. What are the disadvantages? I'll come to that. No fees charged. No, 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 no. Crypto is not free. When you are transacting, there is a fee charged. Avoiding KYC can't be treated as advantage. No. Hedge against banks, kind of. Okay, so uh, it is decentralized. Someone mentioned it is decentralized, so there is no governing body behind it. You can even go to Mars, and if there is internet, you can transact. It is peer to peer. You don't need third party. You control your crypto. So what has happened a lot of times, that if you're not paying a mortgage or if you're not paying your credit card bill, and if you have your account in the same bank, the bank can take your money, right, in your credit card account. It has happened to a lot of people. So in crypto, that cannot happen because you have control over your money, right? If you don't want to, it's basically a push mechanism, not a pull mechanism. Nobody can pull money out of your wallet. It's only when you verify or validate it, the transaction can be sent outwards. um, it is borderless, of course. You can go anywhere and do it. You don't need anybody's permission. If you have a decentralized wallet, you don't need anybody's permission. It is a non-correlated asset, right? Somebody asked over there how it is creating wealth or something like that. So what is a non-correlated asset? Now, Indian rupee says that I promise to pay the bearer. So the moment you say, I promise to pay the bearer, that means Reserve Bank is taking the onus of honoring that rupee note, right? The rupee note is just 1 rupee in the printing value. The paper has no value. It's just trust. You believe in the government, you believe in the Reserve Bank of India, and that's why you can transact in crypto. Uh, you can transact in the rupee. Crypto is a non-correlated asset. It comes with the consensus of people. All right. So it's like if I say that this pen is 100 rupee and everybody in the room agrees that this pen is 100 rupees, it can be transacted for a barter for anything, goods or services, for 100 rupees, right? So the value, the pen remains the same, though, but the consensus, the acceptance of people gives its value. So it's a non-correlated asset. So when the markets are falling, maybe because of some COVID kind of thing, or a recession or something, because this thing is consensus driven, it's not pegged to Reserve Bank of India or any government. It is a non-correlated asset, and its price will move according to its own consensus and the demand and supply and the network strength. It's not impacted by inflation, of course, because it is limited in supply. So these are some of the reasons why crypto is good, because it's solving a problem. It's not there to, be the mainstream currency. Indian rupee is not going anywhere. Currency is the way we work, the way we transact is not going anywhere. It's going to be the same, I don't know, for a lot of years. But crypto just gives you an alternate. Suppose you need to transfer somebody money pseudonymously, you can use crypto to do that. You can send your son studying in the US crypto in 5 minutes when he needs it urgently, right? Suppose something happens to him and he's asking for money, he doesn't, you can't go to a bank and, fill those papers and wait for a week. Crypto is instant. So if you need it, you use it. If you don't need it, you cannot. I mean, it's like having Pepsi and Coke, right? Some people like Pepsi, which is centralized, and some people like Coke, which is decentralized. It's up to you. So but this gives you an alternate, right? You're not stuck to the same 500-year-old mode of payments. Globally, what is happening, right? Elon Musk bought crypto prices went up. Then MicroStrategy has been continuously buying crypto. So this is what the publicly traded companies. There is this website called bitcointreasuries.org. That's where I've taken the screenshot from. You see MicroStrategy has 77% of their holdings, the company's holdings in crypto. They own 91,064 BTC. Tesla owns 48,000 BTC. Tesla made more money than selling cars than in crypto in just 2 months. He bought it at, I think, he invested $1.5 billion, and now it is worth 2.6 or 2.8, somewhere between that. So he's already made that much of money, but don't FOMO out of it. See, these guys are visionary entrepreneurs. They know that this thing has value, and they've been the first entrants. Now the first trillionaire, it's said that the first trillionaire will be from the crypto industry, because it's limited in supply and the prices will keep going up. It's right now $50,000. There is a possibility that if 30% of the world's transactions get into crypto and blockchain, where would the prices be, right? So it's basic math. You see the supply and demand and make sense out of it. So these companies are already getting into it. So and of course, a lot of countries are also have started accepting their taxes in crypto. So if you have Bitcoin, you can do a lot of interesting stuff with it. Oops. It has gone to $57,000. It was there last month. So it's like a roller coaster ride. In 2000, I think in 2015, it was around $500, 450 to 500, something around that. Then it came to 2017. There was a block halving. A lot of people got to know. Actually, a lot of scammers also entered into market, because it was an unregulated market. Ethereum enabled people to create their own coins, right? So there were a lot of scam coins, and the market got a speculative pump. It went up to around $19,000 and there was a crash again. Then again it went up, then it was a crash. So see, there is no SEBI here or any SEC to stop trading or put a lock at trading because it hits the circuit. It is a global decentralized trading, and there are several exchanges. It's not done by one exchange. There are so many exchanges, right? So there is a lot of volatility, right? Because we always see the depth in the order book. So if there are like 5 people buying on the buy side and 10 people on the sell side, they can actually play the prices and pump it or dump it, right? So this has happened, but now it has reduced because more people have entered. Institutional investors have entered. Banks have now started to explore this space. I think a few banks in Hong Kong, they have already started selling crypto, right? So when all these things are happening, there is more liquidity in the market. It becomes difficult for 5, 10 people to manipulate the price because there are hundreds and thousands of people who are trying to buy at the same price. So the prices become more stable. So that is what is happening, but it is still at a very nascent stage. You see gold has a 3,000-year-old history and crypto is just 11 years old. There's a lot of action yet to happen. Currently, the market size is $1.7 trillion. All right. It was on February first week, it was $1 trillion. Today it's $1.7 trillion. 60% of it is by Bitcoin. He's the king. Bitcoin is there. A lot of people have it. A lot of institutional investors, they're not buying other currencies. They are just creating their, uh, converting their wealth into Bitcoin because they consider it as a store of value, not as a currency or to settle transactions, but a store of value because when everything is going up, and even this is a non-correlated asset, it has a potential of going up. Ethereum is next with about 12.5%, 12.73%. And then other coins, there are a lot of other coins which we call in the crypto world as shit coins. There are a lot of shit coins which have started coming into, if it's like even I can start Sidharth coin, right? But it has to have some value. A lot of people must accept Sidharth coin. It has to have a good market cap to come in the mainstream. If it doesn't, it'll be one of the other coins. Um, Indian crypto market size and growth potential. Okay, how big is the market in India? $15 billion is the potential market size. Currently, in India, there are about 1 crore users who have crypto. Okay, so if you are thinking that crypto kharidna chahiye ki nahi kharidna chahiye, you have reluctance. There are 1 crore people out there who already have, right? So if there is a ban or anything like that, if it may happen, it won't happen overnight. The government will give you time to declare your holdings. The government will give you time to sell your holdings, convert it into your fiat currencies, and get out of it. They cannot put all those 1 crore people in jail. It will be like a crazy situation. So all those things are not going to happen. Yes, there was a bill which said that, but I don't think so. That bill is going to be in the consideration anymore. It is mostly scrapped. They are working on a new bill, a new framework, which is more well thought. And let's see, you'll know in a few weeks or the coming months, mostly in the next session. Um, there is a crypto trading volume of 250 million plus in India, right? So it's huge. The market is good enough. I mean, it's not worth banning, right? Because it has passed that stage now. There are 5 to 6 major exchanges which are doing really well. A lot of people are using them. Two main nets. One of them have become a $1 billion main net. It's from India. Over 7,000 blockchain developers who are developing on Ethereum and other blockchain platforms, and they are just trying to experiment and learn. Right, some of the leading tech companies in India already have blockchain developers for the enterprise side, not the decentralized, and currently employs around 4,000 experts or professionals, or it has generated 4,000 people, 4,000 jobs directly. And if it gets regulated, it can go up to 25,000 jobs directly in, I think, the very first 12 to 18 months of regulations coming in. So that's the Indian crypto market size. Um, Empower the emerging fintech. See, now this space is new. A lot of people have concerns about it. People are reluctant in getting into it. So you need to open your mind and see the possibilities. What if it is regulated? What are the pros? What are the cons? It's not something which is used for illicit activities, right? Any digital transaction. A lot of people say it's used for terrorism, drugs, this, that, right? About 70% of the US dollar have traces of cocaine, right? So it has the US dollar is being used for drugs or terrorism, or before crypto there was terrorism and drugs, right? So you can't just blame crypto. Yes, it is pseudonymous, it's beyond control, it has all those problems as well. So does the US dollar and fiat currencies in the current ecosystem. But you see the good parts of it. It has 95% good about it and 5% bad, which is there in every currency, right? So you should embrace the good and try and ignore the bad. Educate yourselves, right? It's very important to learn what Bitcoin does. I'll suggest primarily learn Bitcoin than any other currency. That's because Bitcoin is the oldest. There's a lot of data available about it. A lot of books available about Bitcoin. There's a very good book called Mastering Bitcoin by Andreas Antonopoulos. Read that to educate yourself. It gives you a very good picture of what Bitcoin does, and how it works. You need more fintech professionals. Okay, now uh, the existing fintech professionals, they have all they've learned existing financial ecosystems. They are from the banks, and but they don't understand the decentralized world. So they need to educate themselves. On the education side as well, there has to be more universities teaching crypto, right? Only then it will come in the mainstream in the coming few years. And of course, a lot of investors must uh, understand that if you want an ecosystem to grow fast, you need to pump in money. Now, a lot of startups in India, they may be going to investors, and the investors are like, nee, Bitcoin, don't do that, right? It's unregulated, it's illegal, or something like that. I think investors, like a lot of investors globally, it's a 1.7 trillion market now. So there is a lot of investment which has been done already. So it's not that you are going to be the first ones to do that. But yes, investors must educate themselves, learn how the ecosystem works, see the potential, see the pros, see the cons, and make a decision of starting to invest into crypto projects, because only then the the market will grow and reach a sustainable level to break out and blast off, right? Because I think that if regulation comes in, India will be the leading country in the crypto space. You know why? Because we have the best developers out there. All these companies out in the US, or maybe Europe or whatever, they all have Indian developers on board. So and the reason why they are going over there is because they are not getting opportunity here. So we must embrace the startups here, encourage them to do something. See, all developers, startups, they are all smart people. They are not going to do anything illegal. They'll make sure that the compliances are in place. There are great law firms. There are great frameworks which they can follow and make a change in the right way, like how Uber did. If people hated Uber, but it changed, because it was solving a great problem. So yes, you should get out of that reluctance. And that was it for the presentation. Now I'll take the questions. Really interesting questions over there. So shoot it.
Yeah. So, Siddharth, while I asked Charlie to, you know, curate these questions, yeah, we just wanted you to kind of stop your screen sharing so that we can see you well. And sure, Charlie, please go ahead.
Um, so we'll start by Mr. Sanjay Kotari has asked, what is the underlying for this crypto, say like gold for currency?
So where does crypto derive its value from? Somebody asked. I think that's the same question. Um, it's consensus. Okay, I explained it that if this box is, say, everybody accepts in the room that this box is worth 100 rupees, it can be exchanged for 100 rupees. So why do we all trust gold? Why don't we all trust platinum or titanium? They are rarer metals, right? There is diamond, which is even rarer than anything else out there in the mainstream. Then why the governments keep gold? Because globally, it has been taught to us that, since the start, it's like since the Egyptians were there, right? That gold, everything should be gold, 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 gold. It was considered to be pure, sacred, and stuff like that. So people have developed that belief in gold, that yes, gold makes sense. It is something which we can trust. Not titanium, not platinum. A lot of people don't have access to those things, right? But gold is accessible. A lot of people have it. It's the consensus which gives the value. In the Bitcoin network, there are thousands. If I do a transaction from CREBACO to Mumbai Angels, this transaction is validated by a lot of miners who have deployed, installed machinery. They have deployed the resources. They are paying rent. They are paying internet. They are paying a lot of taxes and stuff like that just to validate that transaction, right? And there are someone is sitting in Iceland and mining it and validating your transaction, and somebody is in North Korea or South Korea, you don't know where it is. So there are so many people validating that transaction. So that's where that transaction gets its value, because so many people give their consensus to that transaction. So that's where it gets its value from.
Thank you, Sidharth. So our next question is from Aditya Mehta, who's asking, but government can ban the transfer or withdrawal of cryptocurrencies to fiat currency in relation to when you said that government cannot ban the cryptocurrency.
Okay, so government can ban transfer of conversion of crypto to fiat currencies. Yes, they can do that because governments control the banks. So like RBI had done that, right? Earlier, RBI gave out this circular saying to the banks that, stop all transactions with any crypto company. So yes, the government can do that. But if I have crypto and you are ready to accept crypto and we are doing a peer-to-peer transaction, that cannot be banned.
Okay. Then we have from Shaurya Srivastav. He is asking, there is no gold backing for any cryptocurrency. So is it a bubble which we are seeing for Bitcoin or other cryptocurrencies?
There is no gold backing. Why gold? Why do you need gold? It's a network. I just explained. It's a network which gives value to it. So it's a non-correlated asset. You know, just Google non-correlated asset, and probably the first thing you'll get is Bitcoin. So it's definitely not a bubble, because bubbles usually blast in maybe few months or a few years, but it cannot, like, bro, Elon Musk cannot invest in a bubble. He's smart enough to do that, right? That's one of the reasons. But a bubble usually takes 10 to 12, it does not take 10 to 12 years. So the industry is there, and kind of people, Coinbase is coming out with their IPO for $100 billion. Okay, they cannot do that if it is a bubble. So it's not a bubble for sure.
Okay, that was well enough. Now we have from Mr. AB, who's asking, where does the crypto derive its value from and what is it backed by?
It derives its value from the network, and it's backed by the consensus.
Uh, so that I'm going to ask you the next question from Praveen Goel. Quantum C point is very interesting. Prime factorization of a large number takes very long in pre-quantum world and is basis of encryption here. So anything that you want to talk about quantum C point here?
Okay, so a lot of people say that quantum computers can solve this problem of, so they can gain a 51% control over the blockchain, and they can reverse a transaction. Quantum computers are not there yet. Okay. um, a Bitcoin network can be upgraded. Okay, there is a soft fork. So if there are quantum computers, why are we just assuming that Bitcoin cannot upgrade and it will be the way it is, right? When I transacted first in Bitcoin in 2015, the transaction happened in few seconds because there was no network traffic. Very few people knew about it. As in 2017, it used to take hours because there were a lot of network traffic and less miners, less nodes. The infrastructure was not that. But now there are more people, there are more miners, there are more nodes, and the transaction is now, I think, just 5 to 10 minutes, right? So as the network grows, um, even its capacity grows somehow. So it's a scalable thing, right? So it's not something which is just made and it's going to be like that. It's a scalable thing. Now there are integrations of Lightning Network, which is of course a parallel chain which does a transaction and puts it on a blockchain. If it is there are SegWit wallets which has more capacities of handling a transaction, number of transactions in the block. There are new protocols which are being tested. So it's not that if there are quantum computers, there will be quantum technologies which would scale the Bitcoin network from what it is today, right? So we should not worry about it. And you know if I had that much money, uh, like like a quantum computer, I don't know how much money it would cost, but why would I use the quantum computer to reverse just one block of transactions? Because the moment that happens, the entire other network of nodes, they will kick that node out, right? So if I say have, I don't know, quantum computer will definitely cost at least 30-40 million dollars here. Why would I spend so much money and effort just to reverse one block before somebody else kicks me out? So it doesn't make sense. It's all a fallacy. Next.
Okay. So next we have from Mr. Harsh. He says, in India, can we show a crypto as cash in hand on our balance sheet?
No, you can't. Crypto is crypto. You have to show it as crypto. You have
Okay.
crypto in hand. Current. Consider it as asset that you have invested in. Just treat the way you treat gold. Okay, that is the best thing to do, because gold is an asset. Gold can be used for a transaction. If I have 10 grams of gold, I can give it to you and take your product and services, right? So consider crypto as gold. If you are buying gold, the way you show it in your books, your CA knows how they show your jewelry in the books. Just do the same thing till there are further guidelines, till there is indexing allowed, or long-term capital gain tax and all those things. There is still in the gray zone, but assume that it is gold, or and pay the maximum possible tax slab for it. Of course, if you are investing in crypto, you are making money as well, right? So you must pay tax. So consider the maximum possible tax slab in your income bracket and go ahead. You can't declare it as cash in hand for sure.
So our member Hiloni Choksi is asking Siddharth,
Hmm.
you said that the supply of Bitcoin is limited. Why are you saying that the supply is limited till 24? In the future, they too will introduce more Bitcoins, just like the way the government is printing more money.
It won't be Bitcoin. Okay, Bitcoin's program says that 21, it's 20.9999997 point something. So it's time based and it's fixed. It cannot be changed. Yes, there can be other currencies, but it will not be Bitcoin. Okay. So why would you trust Bitcoin, right? Because Bitcoin has a maximum number of acceptance. It's basically Metcalfe's law of telecommunication. If I have a mobile phone and I'm the only one with the mobile phone in the world, I cannot call anybody. But if everybody has mobile phone, the value of my mobile phone increases. Same thing is happening with Bitcoin. A lot of people will have Bitcoin. They already have. So even if the new currency with more number of coins or better transaction strength or anything comes, it cannot compete with Bitcoin, because the Bitcoin's network is much more older, mature, and more accepted. on every wallet, every exchange, Bitcoin is accepted. There's a possibility that the other new coin is not even listed, but Bitcoin is there. So time will tell you, but it's not that more new Bitcoins are not going to happen. They'll be like, there is XRP, there is Litecoin, there are other coins having their own network value and own trading value. So those will be there. Let them come.
Okay. Next is from Akshay, who's asking that, is this correct that crypto requires specific environment to run whole process like the servers or machines?
Crypto requires, I didn't get the question. Can you please repeat? So sorry.
Sure. So crypto requires specific environment to run whole process like the servers or machines. Is this correct?
Yeah, crypto requires like Bitcoin requires ASIC miners. ASIC is application specific integrated circuits. So those mining machines. Only those machines are used to mine Bitcoin. Okay, Ethereum can be mined with other graphic cards and other things. So it is required to have ASIC machines to run Bitcoin.
So our next question is from Kaushal, our member Kaushal, and there is interesting chatter around this, but he's asking what are the number 2 and 3 cryptocurrencies after Bitcoin? Sidharth, we want your take on this.
Right now it is Ethereum. Ethereum is the biggest because it has more number of use cases, more nodes, more miners. The ecosystem is much more evolved and developed. There are a lot of developers on the Ethereum blockchain. So Ethereum is definitely number 2, and it's gonna be there for a couple of years for sure. But now Ethereum is also facing challenges. It has suddenly become really expensive because crypto is like a FOMO, right? So everybody wants to mine, everybody wants to buy crypto. So Ethereum network is the best in the smart contract platforms, but it has getting challenges from other smart contract platforms like Cardano and XLM and all these guys. So they are also making great technologies and they are cheaper to develop on. Number 3. I'm not sure. Ethereum and Bitcoin.
Okay. Our next question is from Nikhil, who's asking, what if one day someone buys a nuclear overhead using Bitcoin, and how do we avoid that? Is that even a valid concern?
If I want to buy nuclear overhead, I will not use something which is traceable, right? So Bitcoin is traceable. It is not anonymous. It is pseudonymous. It says that C is transferring to B. Okay, so you know that there is somebody called C and there is somebody called P. Okay, we just don't know that C belongs to Sidharth and B belongs to Mumbai Angels. So it is pseudonymous. It's not anonymous. Is you don't know where some transaction is happening and you don't know where it is coming from.
Our member Ramki is asking, of course, to talk about the whole investing process, which I assure you, Ramki, we will do a separate session completely on how to start investing in crypto. But if you can spend just a few seconds or a couple of minutes to talk about Bitcoin mining for him, Sidharth. He specifically asked about Bitcoin mining.
Bitcoin mining. Okay, so what is mining is basically when CREBACO is sending 1 Bitcoin to Mumbai Angels. Okay, that validation. Why would you do it, right? So it's a peer-to-peer transaction which is taking place, but somebody has to validate it, right? So to validate, there are few people who want to join the network and they want to mine. So they buy these ASIC machines which are like a few lakh rupees or something like. It's expensive, those machines. They buy it, they put an internet, they have an engineer, they rent out a space, if it's a hot place, they even put an AC, stuff like that. And then they start validating transactions. So the moment they validate 1 block, which consists of about 2,500 transactions, the moment they do that validation, they get a block reward. The block reward currently is 6.25 Bitcoin, which halves every 4 years. Okay. So they get that 6.25 Bitcoin from the network as a reward of putting that money, internet, resources, everything and that's what is called mining, because those 6.25 bitcoins are baby bitcoins. They are just born. They have not been sent to anybody. They are not coming from anybody. It's the network rewards the miner that yes, yeah, ढाई हजार transaction confirm किए, ये लो तुम्हारा enough, so that he can pay his electricity, he can pay for his machinery, and that's how the entire ecosystem works. So that is what mining in a nutshell.
Well explained. Our next is from Sahana, who's asking, does it make sense to still purchase Bitcoin as an investment?
Of course it does. I'm a Bitcoin maximalist, so I won't say no. But apply basic math to it. There is limited supply. A lot of people are buying Bitcoin. It is solving a great problem, and it is giving you a decentralized alternate to do transactions, right? So it still makes sense. Now, Bitcoin is just $1.7 trillion out of the approximately $90 trillion world market. So even if now forget all that, see World Economic Forum, what they say is 30%. Now, even if you say 30% is wrong and just 5% of the mainstream money will come into crypto, the market size will go to at least $5 trillion, right? So if $5 trillion is there and Bitcoin's share is 50%, right now it's 60%, even if it drops to 50%, the price of Bitcoin will still go up, right? So that's my fundamental assumption, that assuming a lot of reports and the learning and the people joining the network, you just go online and see how many new wallet addresses are getting created. You can see that, right? That these people have joined the network, these people have started transacting into Bitcoin. It makes a big difference.
So that the next question is from Aslam, and he's asking a question which is very similar to something that's come offline for us also. Is that how do you really assess a crypto asset? And so there are two parts to this question. One is, how do you assess a crypto asset, as in which platforms are safest to trade on, and what are the fees involved in disinvestment of any crypto?
Okay, so these are two questions. How do you assess a crypto asset? All right, so that's what we do at CREBACO. So CREBACO stands for Credit Rating for Exchanges, Blockchain, and Coin Offerings. That's what CREBACO stands for. What we do is we assess cryptocurrencies, we do due diligence, we do audit, we do a lot of research. How are we different? We learned from S&P, Moody's, Fitch, Dun and Bradstreet, all these guys. They've been doing rating for, I think, over 100 years. S&P is definitely a few 80, 90 years old company, right? So they've been, so if they want to assess, say, Reliance Industries, right, they will see how much profit Reliance is generating, what is the order book and stuff like that. But you cannot apply that same parameters to crypto. Crypto is different. You see the number of nodes, you see the miners, you see the transactions, you see the transaction speed, you see the transaction fees, you see the mining reward, acceptance, and so many new things, right? So what we did at CREBACO, we learned from S&P Moody's, we picked a lot of things from there, and we developed our new parameters, right? So we have now 150 parameters where we assess a project based on its legal corporate structure, right? So if it's a scam project, they'll probably go to some country like BVI or Cayman Islands and get themselves incorporated and have one more company, holding company or a subsidiary company in a country like Singapore, right? And then they'll raise money and sue. So you can't sue them because their corporate structure says that they are Cayman Island based. You can't do shit out of it. Pardon my language. So that's the legal. We see the tech, that whether tech is good or bad. Some people are just using Ethereum and then they claim that our coin is the fastest, but actually if you go to see, it's just an ERC20 token, which even a 10-year-old can make using the Ethereum blockchain. We see the team strength, we see how experienced the team is, or because everybody is new in this space, right? You cannot expect somebody to have a 10-year experience in this space and start a company. So legal, tech, finance, we see the financial projections, how much money they are raising, how much control they have, right? So this is something very important. Say I am launching CREBACO coin, okay, and I have got 50% of the coins with me and 50% out to the public. I've got 50%, so I can dump the coin whenever the prices go up, right? So we see the distribution of the coins in the market, that it's evenly distributed, and the founding team cannot manipulate the price, or there's no insider trading, in simple words. So these 4 or 5 parameters are required to assess a project. There have been a lot of scams, so be careful. Don't invest in any new coin, which claims to be the next Bitcoin or stuff like that. Forget about it. There is no next Bitcoin for the next 2-3 years. It's just gonna be Bitcoin itself. People came out with banana coin. Somebody said that I'm gonna put bananas on a blockchain, and they raised, I think, $3.6 million or something, right? They just had an ERC20 token, a website, no incorporation. Um, I think the LinkedIn had Shutterstock images, fake profiles, complete scam, right? It just happened. So it's important that you must analyze where you are investing your money in. The next is the exchanges. There are a lot of exchanges. They all charge different fees. They all have different liquidities. They all have different features, and it's up to you to choose which exchange you want to do deal with. Some exchanges have, like Coinbase, for example, has a very basic app. You just put $100, click buy, and your crypto is there. So it's basically selling you at the market price. And some exchanges offer you an order book, where you can put a limit order. Even Coinbase offers that, but it's up to you. Which one do you think is good? So that's all.
Okay. Our next one is from Ranjit Nava. We have two parts of this question. It says, can Indians buy Bitcoin today under current regulations, which is mostly card? And the second is, what is the future expected value of Bitcoin, and which financial model helps to determine that?
Okay. Under current regulations, you can buy. It is in the gray zone. You buy, you declare, you pay taxes. So but you won't be jailed for buying Bitcoin. I don't think so that's going to happen, because the market is too big for that to happen. We heard a few positive statements from Anurag Thakur and Nirmala Sitharaman, that previously they used to call ban Bitcoin, criminalize it. Now they are talking about regulating crypto, right? So when they are moving their stance from ban to regulate, we get a hint that there is something good happening. How do we determine the value of Bitcoin? I think I just explained it. It is the network value. Apply basic maths that the mainstream money is coming in and there is limited supply in Bitcoin, so the prices will probably go up.
Sure. Our next question is from Anil Bapat. If a Bitcoin trail is traced down to a particular pseudonym, then can that be disambiguated to an actual person's identity? Who will do that in case the government requests for it?
Okay, so there are a lot of companies, even we are doing a prototype of it, where we are kind of flagging the wallets, right? So just imagine there is a chain of A wallet, B wallet, C wallet, D wallet. All right, I know D wallet belongs to Mumbai Angels, so I flag it. And I can see that A wallet has transferred money to B has transferred to C, and C has transferred to D, which I know is Mumbai Angels. So I'll go to Mumbai Angels and ask them, who's giving you this money? They'll say, Champaklala is giving us the money. I'll go to Champaklal, I'll ask who's giving you this money, and I'll go to B, and so to A. So that's how you start to trail a transaction, right? So there are these agencies. What they are doing are they in those thousands of wallet addresses out there, probably lakhs now. They are flagging whoever they know. Okay. And that's how they're creating uh, an internal web of transactions which are taking place. So exchanges mostly have a lot of KYC, like Indian exchanges for sure have KYC verified wallets if you want to transact. So if that KYC verified wallet is transacting with a non KYC verified wallet, you've got the trail. That's how it is happening. And yeah, there are companies like Elliptic. It's a US based company. Chainalysis, again a US based company. They do this stuff for the government. Even in South Korea, there is a company which is doing this. We are running a prototype which does both on Ethereum and Bitcoin. So yeah, we can do that.
Next one is from Harshdeep. Says, is it correct to say so long as the acceptance of cryptocurrencies keep going up, their value will keep going up?
See, crypto is a deflationary asset. So it's like assume that you have one Bitcoin and you want to go and buy a TV, which is say $50,000. So you won't do that, right? You'll expect the price of Bitcoin to go up to $60,000, and you'll be like, थोड़ा बढ़ेगा तब जाके खरीदता हूँ, $10,000 शायद profit हो जाए. And the TV guy, he'll be like, यार माल नहीं बिक रहा है. Assuming that there is no fiat currency, there is just Bitcoin and TV, right? There is no fiat currency. The TV guy will say, यार माल नहीं बिक रहा है, चलो $50,000 है, I'll reduce the price to $45,000. I'll reduce the price to $40,000, and you will not buy because you are expecting the price to go up. So I'll talk about Bitcoin right now. Bitcoin is too nascent. It is more of a store value where you just buy it like gold and you keep it in your locker. You don't use it for transactions. You don't use gold for a day-to-day transaction, right? And likewise, you usually don't use Bitcoin for a day-to-day transaction. You convert it to some fiat currency and then use it, because everybody is right now, it's speculating that its price is going to go up. And because everybody is expecting it, everybody is holding on to it, the price will go up.
Our member Sanjeev is asking, can you explain very briefly about the taxation in India for crypto?
So it's advisable that you buy your crypto, declare it in your books, and pay the revenue out of it, or the income out of, so say you bought your Bitcoin at 10,000 rupees. Okay. When you sold it, you get 15,000 rupees. So that 5,000 is your profit for which you must pay taxes. So it's important that you declare your crypto in your books, that you've bought it, and you declare that you sold it and you've made this profit. And you just treat it as your other income. Technically, it should be your other income, and pay as much tax as you can according to your income bracket.
So I will follow this up with one more question, Sidharth, from Tushar. So he's saying, if he would like to look at data mining as a business in India, who's the person who can advise on this?
Data mining in what industry? Like,
so I'm
data
going to,
is in several spaces.
So I'm going to take a minute and I'm going to ask the next question, and then I'm going to unmute Tushar to let him ask you the question. In the meantime, Arvind is asking, can we invest in crypto through CREBACO? And
No,
which is the
we are
best
not.
exchange?
We are not an we are not an exchange. We are a research company which tells you what to do if you want to buy crypto, and we or take any crypto or blockchain related decision. But we are not an exchange, right? So you can't buy through CREBACO. I don't know which the best exchange is. All are very good. All are neck to neck, superb techs, great liquidities, and great. Everything is good. I mean, it's like Coke and Pepsi, right? Choose what you want to.
So while we wait for Tushar to get unmuted and ask his question, we good. Chani, can you take the next question, please?
Yeah, sure. So next one is from Dr. Govind. He says, can Bitcoin replace the existing rupee?
It's not meant to do that. It's meant to be an alternate. It's not meant to be a mainstream mode of transacting. You can do that, but it's not meant to do that. It's just there to provide an alternative.
So I am asking Tushar to unmute, but I think he may take a few minutes. In the meantime, Siddharth, there's one more question that we received actually when we shared the report, which Ketan and Company and CREBACO have put out. We got a question saying who else has done a report like this, and what are the kind of reports that, why did you do this kind of report?
So one of the reasons what we have done, we have worked in several other countries as well. We have worked with the Thai government. We have given them our inputs. We have worked with a few governments in government of Singapore, government of Malaysia. We have given them our proposed regulatory frameworks just as a subject matter expert or somebody who understands this space, because these babus, they don't understand what it is, but they're really smart people, trust me. Like I've been interacting with the government guys. They are really intelligent, and they, if they want, they can regulate it and make our country do wonders, right? But it's just that they need to know the pros and cons. They are running a country, yeah? It's, and a country like India, so it's really difficult to come out with a law, you know. It's so uh, what we did is, we first, because of lockdown, I was more active in Indian ecosystem. So I understood that there are a lot of concerns. The government is trying to ban it, and those bills and those Supreme Court judgments. So we said, let's ask the guy himself. So we organized this webinar in collaboration with Blockon and Ketan, and we called Mr. Subhash Chandra Garg, who was the guy who made this bill, and we understood what the concerns were. So we understood that his committee was looking at crypto as a currency. So Indian regulation does not allow any other currency, right? It's not a freely convertible, or it's not an open market. It's like if you're going to Shiv Sagar and you want to pay in US dollar, you cannot do that. You have to give Indian rupees. But if you are in Germany, you can give US dollar and have a cup of tea, right? Because they accept it. The guy will accept it, charge his conversion fee, and still, like, bill you. So in India, you cannot do that. So because India does not allow any other currency to be transacted, there has to be these forex guys or banks which have given rights to do that. So we understood that this was the problem. Then we got together with Ketan, entered into a partnership, made this framework, and after analyzing, we understood that it should be considered as an asset. So we started working on this report in I think July or August, and we submitted it to probably all the government departments, standing committees, MPs. Everybody has got it, and the executive committees, SEBI, RBI, all these guys. We have submitted that report to everybody, so that they get an overview in a few pages, that what crypto is, and what are the pros, cons, how it can be regulated, and stuff like that. So it was a very comprehensive framework, but a short one, not a detailed one. But I think in India as of now, nobody has done a framework like that and given it out in the public. So we said, let's do this, to get the regulations traction, uh, get more traction, right? So we gave it out over there. Nobody has done a framework like that till now, but I would urge all those guys over there to make more frameworks, make more representations to the government, so that the government knows that this stuff has some potential, and they can speed up things. We might have not covered a lot of things. There may be people who will learn from our report and cover those things and give it to the government. The faster the regulation comes, it's good for the ecosystem.
Sure. So I think Tushar has finally unmuted himself. Let me just ask him. Uh, he did raise his hand, so I am going to take about 5 seconds to see if he wants to still ask his question. In Tushar, are you ready? Okay. In the meantime, I'm going to take the next question from Sidharth. So, is there a difference between Bitcoin and Bitcoin Cash, Sidharth?
Yes, 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 yes. So there is. There is something called as fork. So it's like it's a community driven thing, right? If there are like 10,000 miners and nodes in the Bitcoin ecosystem, but about 5,000 of them, they say that, Bitcoin is not good, it's not doing great. Let's develop a better technology, a better protocol. So what they will do, they will just copy the entire blockchain, name it Bitcoin Cash, and they'll fork it. And those 5,000 miners will start mining Bitcoin Cash, but Bitcoin blockchain will not get affected. Bitcoin will keep going the way it is. So then it's up to the user if they want to trust Bitcoin Cash or Bitcoin. So Bitcoin has gone through a lot of forks. I think over 200 to 300 forks like that. People have copied the Bitcoin blockchain and named it Sidharth coin, CREBACO coin, Mumbai Angels coin, whatever. There's Bitcoin Cash, Bitcoin Gold, Bitcoin Diamond, Bitcoin Silver, Bitcoin. I don't know, so many Bitcoins. You just type Bitcoin on Coin Market Cap and you'll get all those Bitcoins. Even Litecoin, I think, was a fork of Bitcoin. So it's up to the community to decide which coin they want to go ahead with. So, but yes, there is an advantage if you have Bitcoin and Bitcoin is forked like that, a hard fork. You get one Bitcoin Cash. Even though you choose to stick with Bitcoin only, you people who had Bitcoin at when Bitcoin Cash was forked, they all got one Bitcoin Cash. They all got one Litecoin. They all got Bitcoin Gold. So it's good. People are forking Bitcoin. So yeah, there is a difference in Bitcoin Cash and Gold, Bitcoin.
Uh, Chandni, over to you, or can I take the next question? Go ahead, please.
Okay, sure. From Satish, we have a question which says, please, can you please differentiate between tokens and cryptocurrency?
Tokens are utility tokens. It's like I'm starting a sugar factory, all right? And I come to you and say that, I'm starting this sugar factory. You take 1,000 tokens of Sidharth Sugar Factory. And if you want to buy sugar in future, you can give that tokens back to me. It's like, Jet Airways reward points were there, right? You get your reward points and you redeem it for a flight tickets. So that's the utility of that reward point or token for that manner. And if you are and if you have, say, crypto with you, uh, you can go to anybody and say that, I have got Sidharth Sugar Factory coin and I want to uh, trade it with something else. So whenever you want to buy sugar, you can go to Sidharth, he'll accept this thing. So he's basically doing a barter of that utility token. So that's what the main difference is. Now, a currency like Bitcoin is just a currency. It doesn't have any utility for that matter. But this one, so sorry, my battery just went off. But any other utility which is made on a utility token which is made on ERC20 can be used for several other things.
Sure. So, Sidharth, we did get a question offline about the CBDCs. So, would you like to talk a little bit about that, specifically with relation to crypto?
Sure, CBDCs are great here. CBDCs are not decentralized. Okay, CBDCs are legal tenders. They are issued by the Reserve Bank of India or the SEC, Federal Reserve, or any regulating body of a country. So CBDCs are central bank digital currencies. Um, what Bitcoin is not a CBDC. It's not regulated by any governing body. Bitcoin is decentralized. It's a network, right? It's borderless. But if you want to transact into CBDC, it'll be like a Paytm kind of a wallet, right? You do your KYC verification and you may go to your bank and tell the bank that, or do a UPI transfer and convert it to a CBDC. So it's something which you won't even realize. It will everything all digital money will soon be converted into CBDC, which uh, which will be kind of peer-to-peer. So if I have a CBDC wallet and you have a CBDC wallet, we won't need a bank to do the transaction. That wallet itself would do the needful. Also, CBDCs are global, in my opinion. I don't know how the Indian government is going to do this yet, but CBDCs increase the chances of global trades. So the Chinese yuan, for that matter, Chinese guys have already made their CBDCs. I think they have done transactions of about $100 million already. They are given an airdrop of 30 million CBDC Chinese RMB. So if say somebody has a Chinese wallet in the US and he has to make some kind of a transaction with the guy in China, he may use that wallet and do that transaction. So in this case, this transaction is taking place in 10 minutes. It doesn't need any Nostro or a Vostro account. You don't need a bank. Just two wallets are interacting with each other, and those are regulated, governed wallets. So what else the government want, right? So in CBDCs, I see that there would be currency wars, right? Chinese guys will say that we have more users. Indian guys will say we have more users. US dollar will come out with their own CBDCs. They would push for more users. There could be master wallets which accept all CBDCs, convert them. So there is a lot of action which is going to happen in CBDCs in next 3 to 5 years. So, but CBDCs are important. The earlier a CBDC comes in, the better it is, because it will be more like customer acquisition. Like, I personally use a wallet. I won't switch to any other wallet because all my cards, all my addresses, all my electricity bills, all are saved over there. So even if there is a better wallet out there, I won't switch to it.
Sure. So, what about if one of our investors wants to look at crypto mining as a business opportunity in India? Is that a possibility? And who's the person they can get some guidance from on this?
There are people who are doing crypto mining, but I don't know. There is nobody specific who can help you out in this. See, ASIC miners. All I know that ASIC miners consume a lot of power, and ASIC miners don't come out with a warranty, right? So if your ASIC miner gets spoiled, you'll have to send it back to China, and there's a lot of, how you can't send stuff out and call it back, and there's a custom thing, stuff like that. So mining is a little in. I mean, you have to try and do it yourself. Yeah, there are GPU miners which people use to do mine Ethereum, but Ethereum is gonna go under a proof of stake shift. So that means those mining cards may not be useful anymore. So we don't know when that's gonna happen. Probably you won't get mining reward. You may get transaction fees. So yeah, I mean, the market has to open up for mining in India. It's still too small, but there are people who are experimenting at their own capacity.
So that I'm going to take one more question and then I'm going to let Chandni take the last few questions. This is from Abhay Joseph and he says, what's the future of Bitcoin considering the fact that Bitcoin mining uses more electricity than the country Argentina does annually? He's put in some stats here for you to give your comments on.
Okay, Bitcoin uses electricity. So what do you think about your bank which has all those servers, running over there? What do you think about the government printing so many notes? Whenever you go to there are so much money and electricity and internet which is being spent just to monitor transactions or maintain your data. There are data servers. So are those not using any electricity, right? So if Bitcoin comes into mainstream, it will probably not use as much as and what, 90% of the electricity used for mining Bitcoin is actually renewable energy, right? So I was listening to one talk by Andreas Antonopoulos. He mentioned over there that there is a place in China which produces, not China, somewhere in Europe, which produces say 100 megawatt of electricity, and the consumption is just 30 megawatts. So the people of that town, they said that, it was turning out to be too expensive for it. So one Bitcoin company goes there and says that, you know what, I'm going to consume the remaining 70% energy, which is actually going to waste, or not getting consumed, and I'll pay for the power plant in next 2 years, right? And that will make electricity cheapest for you, right? So what do? You create one more power plant like that and invite more people who will mine renewable energy, more Bitcoin using that renewable energy. So, um, you know, the energy which is being used in Bitcoin is just a lot of people compare it. Yeah, note bhi chhapti hai to paid katte hain, right? So the government keeps printing money every year. You don't consider all that. So I think Bitcoin is not going to be an energy gulper in the coming few years, because the other banking and other things, they will stop using that. Things will now then move to decentralized. You know, places with cheaper electricities will mine more Bitcoin. So it doesn't really make a big difference.
Okay. I'm going to take one, like second last question, which is from Sumit. It says, what is the process and steps for someone to buy a Bitcoin, and can it be bought in fractions?
Yes, it can be bought in fractions. You can even buy Bitcoin for 1 rupee. I don't know, 1 rupee तो बहुत कम हो जाएगा. 10 or 50, 100 rupees you can buy it. And you can go register yourself on the exchanges available out there. Go get yourself KYC verified. Start buying Bitcoin. So there is no problem. It's quite simple.
Okay. We have one from our member, Neeti. She's asking, what are the future innovations expected in crypto?
Lots. I don't even know what future innovations would emerge. Right when I remember using internet at 24 kbps. Okay, the entire day it was like a dial-up connection. Now, during just this call, we must have used
Is there an issue with Sidharth's audio?
I guess.
Yeah, I think we'll just wait for a few seconds for his audio to come on.
I'm back.
Yes, yes, great,
I don't
Sidharth.
know what happened.
No, no, not
So
an issue.
so we should wait for a few more years to the industry for the industry to evolve, just like how internet has evolved. Even the crypto space will evolve. Banking space is still evolving. Before, banking was just finance. Now it is fintech, right? Because there is a lot of tech involved in banking. There are mobile apps. The innovation will keep happening.
Great, Siddharth. We really enjoyed the session. Now I will like to invite Meloni for the word of thanks.
And before Meloni comes in, we have many unanswered questions. Meloni is going to share with you guys, the email ID where you can reach Siddharth at, and his social media handles. We know we haven't been able to address all your questions in these 90 minutes, but uh, we will come back to you with more information and more such sessions, and we hope you do continue to keep joining us for them. Over to you, Meloni.
Thank you, Shilpa. Thank you, Shani. So, thank you, Siddharth, for this fantastic, engaging, and informative session. And thank you to the audience for tuning in and keeping it interactive. We have shared that social media handles in the chat window. Please feel free to reach out to him in case there are any more queries that are not completely addressed in this session. Our next masterclass is on making cybersecurity your business advantage. This will be conducted by Ajay Singh, corporate advisor and author of Cyberstrong, which will be on 17th of March. And at the end of this month, we will be bringing in three exciting South Korean startups to our Indian investor audience. Make sure to keep track to our events by checking out the website and social media. We have shared the links in the chat window. Thank you once again for your participation and presence. A big thank you to Sidharth Sogani for conducting this masterclass. Hope to see you at our next session in the coming week. Have a wonderful evening. Thank you.
Have a great evening. Thank you so much. Bye.